So when we're looking at the midnight open, we have to think about what color the candle is. So basically, whether the candle is a bullish candle or a bearish candle. I'm gonna have both examples over here. That the color of the candle matters because how these candles open and close is different. So a bullish candle opens different compared to a bearish candle. So I'm just gonna have these two candles like this, and let's just say this one's the bullish one, which if it's bullish it means it's green. Let me make it dark, which means it's green. If it's bearish it means it's red, right? So if you look at these candles, right, if we have both these candles, if we look at them, the green candle opens at the bottom, so it's going to open like this. The candle's going to start like this, then it's going to start pushing higher up, it's going to be moving like this and all of that, then eventually it closes up at the top, right? Whereas the red candle is actually going to open at the top already, and then it's going to start pushing down, and then maybe it might close like this. So obviously it's going to have wicks and all that, but we're not focused on the wicks right now because the wicks don't matter. At this point, we just focused on the open of the candle and the close of the candle. So the open of this green candle, a bullish candle, would be at the bottom. So that would be our open. Cool. Out on the other side. That would be our open. And then the open of this red candle is going to be at the top. So now you just have to put this onto like whatever color candles you're using. So maybe with my case, you're going to see that my white candles are actually bearish candles, and then my black candles are actually the bullish candles. So if we're looking at this example over here, and the midnight open was shown by this candle over here, it tells us that the open of this candle, since my white candles are bearish, it means that it opened at the top here, then it started selling lower, which means the open of this area is actually at the top there. That's why I had the midnight open right over here. But if you compare it to a different one, which I'll show you just now, let me zoom out a little bit. If you compare it to this one over here, then you'll see that the open of this candle was actually black. My black candles are bullish candles. That means it opened here at the bottom, and then it continuously pushed up, and then it closed at the top. So yeah, you're just going to use the open of the candle. So in this case, the open, if the candle is bullish, then you're going to use the bottom of the candle. If the candle is bearish, you're going to use the top of the candle. And yeah, these are good examples because you can see that as soon as it went underneath the midnight open, it looks to buy. Same thing with this. It went above it went below the midnight open. It was an opportunity for you to buy. It then swept liquidity at the top, and then it sold also while it was above the midnight open. So that's how you use the midnight open. Maybe I can explain it a little bit more, but basically, and this kind of gets a little bit technical. I'm using New York time, by the way, because that's how the markets operate. So yeah, New York time. And basically what happens is, I also explained this in the mentorship, is that the markets start by consolidation, because what moves the markets is money in the market, right? And the way I always explain this is money in the market is called liquidity. So you have liquidity, and that's basically what moves the market, right? The money in the market. So how liquidity is generated is through consolidation, and how that looks is obviously, consolidation is it not really making too much of a move. Damn, this mouse is kind of dog shit. Yeah, it's not really making too much of a move, right? And then we have people either buying here at the bottom. So whenever the market comes to the bottom here, they're buying. Maybe they'll be saying support, resistance. They'll be like, okay, wait a minute. We can see that in this area there's a lot of support or whatever it is. And then at the top, you're going to have people saying at the top there's a lot of resistance over here. So you're going to have people buying and selling this market. So that was the buyers. And now I'm going to show you the sellers. The sellers are going to be people saying anytime it comes to the top over here, they want to be selling this market, right? So that's how it's going to be looking. You're going to have so many people buying and selling. And now what happens is their stop losses are actually placed something like this. So all of these buyers and sellers, their stop losses placed something like this. And now what will happen is these market makers will see, okay, there's a lot of positions over here, and they will agree that, okay, we need, let's say, 100 million for the market to go from this area to then sell downwards. We need 100 million. And what's going to happen is they're going to wait for either 100 million to be generated over here, which means once these stop losses are taken out, they've gained 100 million from all these people that were entering this trade, and then they then sold the market to the opposite direction. So you can understand that this is consolidation, right? This is what we call accumulation. So the market is not really moving too much. It's accumulating orders both at the top and at the bottom. And then what happens is we have another phase called manipulation, where the market then manipulates these things to the opposite direction. and then it pushes higher up to then also take out the people that were selling at the top over here. So that's basically how the market works, right? Now, the importance of the midnight open is that it basically functions using the same concept. What will happen is this move to the downside is basically telling you that it's trapping traders on the wrong side of the market, right? So this is a false move. This is what we call the Judas swing. You can also search it up on YouTube, the Judas swing. People will explain it to you, which is basically the false move. It stems from Judas from the Bible, Judas Iscariot, the guy that betrayed Jesus, right? The false guy. So that's basically where this thing stems from, right? The Judas swing. And you will see that oftentimes the midnight open is going to show the midnight open. Price is going to trade below the midnight open. It's going to enter a higher time frame PDRA, which in this case, I believe this is a fair value gap. It enters a higher time frame PDRA. It also sweeps liquidity at the bottom, and then it moves to the opposite direction. Now, it's also important that you time this thing, so you put it on with like London session. So London session, you'll be looking for stuff like these. When it enters a high time frame PDRA, you're buying things like that. Let me show you the other one as well. Where's that one at? Yeah, this one as well. You can see that, okay, wait a minute. It came lower. It swept London low. Asia lows over here. So these would be Asia lows. It took out the liquidity over there. It's below the midnight open. Now you're going to look for opportunities for you to buy this market. Maybe you go into lower time frame, you look for market structure shift, fair value gap, breaker block, order block, whatever it is you're entering off of, and then you buying off of that. You could also maybe classify this as an order block over here. You could say, okay, cool. This would be your order block over there. Price came up into it and then it started buying off of it. So yeah, that's pretty much it. The midnight open just tells you that anytime it's below or underneath, it's kind of telling you that the market is manipulating the orders. So let's say you're looking for buys and then you see that, okay, wait a minute, it's below the midnight open. That's a good opportunity for you to buy the market, especially if your daily bias is telling you that today is going to be a buying day. Then that's how you operate using it. But yeah, that's pretty much it. You do also have multiple things. We'll have, let me put this on again so I can kind of show you. So you have the midnight open, and actually let me explain where the midnight open comes from, because not a lot of people know. But like I said, the market moves in four different phases, right? So we have the accumulation phase, right? And then we're going to have the manipulation phase, right? So the market's manipulating. Then we're going to have the distribution phase. And then after the distribution phase, we either have a reversal. So the market either reverses or the market is then going to continue to the downside. But anyway, these are just the different phases. So let's say I'm breaking them up into different phases over here. You see that, okay, cool. This is the accumulation phase. We'd have the manipulation phase in this area over here. Then we're going to have the distribution phase in this area. Then we're going to have the reversal continuation phase in this area over here. You can see that these are quarters. So you have 1, 2, 3, and 4. These are different quarters. Ideally, you want to be entering either in the manipulation phase or the distribution phase. And that's just how we enter off of it. So how these phases came about, and basically how London, New York, Asia session came about, is through these phases. So oftentimes you'll see that Asia session is actually the accumulation of the day, right? Accumulation of the day. Then you see that London's actually the manipulation of the day. Then you see that New York is actually the distribution of the day. Then you'll see that CBDR going on to London close is actually either the continuation or reversal of the day. So that's how these kill zones came about, right? And how the midnight open came about is the midnight open is always the second phase of this cycle. So the second phase would be this area over here, and that's how we'd get the midnight open or true day open or true week open and things like that, right? So anytime we're above this area, we'd be looking for sells. Every time we're below this area, we'd be looking for buys if it does grant us the opportunity to buy. So sometimes you'll actually see that since this phase is the reversal phase or continuation phase, let's say the market actually entered an order block over here, it'll be very safe for you to assume that since this is the reversal area, we can also probably find an area to then buy from this area over here. So that's something that you should also keep in mind with these phases, right? I ideally just trade London and New York. Anything after that, I'm not really trading. But that's just to give you kind of an idea of how these phases came about. So actually, you can use these phases even during a week, right? And let me actually draw it out again. So let's say during the week, you'll have maybe Monday will accumulate a little bit. You'll have Tuesday manipulating it, right? and then you'll have Thursday then distributing it. So that will be the distribution cycle. And then let's say Thursday, Wednesday distributing, then Thursday will either continue or it's gonna choose to reverse, right? So you also see this during the week. And when you're looking at it during the week, this is what we'll call, let me separate it again. Right, so we'd have these different cycles. And the second cycle, which is Tuesday, you'd have something called the true week open. So true week open would be on Tuesday, the open of Tuesday. You do it the same way I did, where you look whether it's a bearish or bullish candle, and then you kind of see where the open of the candle is, and then so this would be the true week open. And you can also do it on a monthly basis, where if you're looking at the monthly basis, then the second week of the month is actually going to be the true month open. So that's basically how it works, and it works the same way. So let's say we're above this true week open, we're going to be looking for sells, and then if we're below it, we're going to be looking for buys. And then you can still do the same thing and go to the true day open, which is going to be the midnight open. So basically, so you don't get confused, the true day open is basically the midnight open, and then the true week open is the true week open. There's nothing else to it. And then the true month open stays the true month open. So midnight open, true day open, and midnight open is going to be at 12:12 midnight. But that's pretty much it, bro. I don't think there's much to it, but